Thanks very much, Warren. I'm very pleased to be here today for Teck's 100th anniversary annual meeting. And I want to say right away that while I have a script here, I go through some information that I want to make sure that we convey, but every now and then I depart from the script, and I want to start right away departing from the script by saying how much I enjoyed listening to Dr. Keevil talk about the history of the company. There's so many valuable lessons to be learned, and we really appreciate the insight that you provide and bringing that to our attention. A lot of things have changed, and I brought an example for you today, and I'm just going to hold this up. This is actually the first annual report of Teck Hughes from 100 years ago. It's 4 pages, mostly exploration results. And I compare that to what we produce today, which is a little bit heavier. It's gained a little weight. But it really does put in perspective just how much the world has changed and just how far we've come. So once again, thank you for teaching us about the history. But not everything has changed. That first mine operated for 50 years, and today we remain committed to the same core strategy of building long-life assets in stable jurisdictions. And that's an approach that has enabled us to build, to diversify, and to seize opportunities. From a company of just 2 people, prospectors James Hughes and Sandy McIntyre, Teck has grown today to over 14,000 employees, 15 operations and offices around the world, and properties, in fact, in over 50 countries. We're now in our 100th year, and it's an opportunity to celebrate where we've been and where we're going. But first, I would like to start today by thanking Teck shareholders for all of their support and all of the members of the board for their dedication. Thank you very much for the oversight and the guidance that's so valuable. And I would particularly like to recognize Brian Awney, who is retiring from the board this year, as we've heard. Brian has been a strong director whose advice and insight was always very much appreciated. I certainly appreciate the personal support of the years, so thank you, Brian. I look forward to crossing paths many times in the future. Thank you. I would also like to formally welcome Ed Dowling to the board, and Mr. Dowling is an engineer with a PhD in metallurgy who brings a wealth of mining and business experience that has already proven to be quite insightful for the management team. And I'd also like to acknowledge John Thompson. Is John here today? Not sure that he is, but he was our Vice President Technology and Development who retired during the year 2012 from our senior management team, and John's leadership proved invaluable in guiding the efforts of CISO, of ART, as we called it, Applied Research and Technology, and the Product Technology Center. And he's still very active with us on a number of files, and look forward to seeing him a lot. So thank you to John. And while he's not retired yet, I do want to say a thank you at this forum to Roger Higgins as well. Roger's our Senior Vice President Copper, who will be retiring on May 31st, so this will be his last meeting. And he joined us 5 years ago, and his first year was certainly quite eventful. I'm not sure he knew what he was getting into at the time, but he certainly made a very strong contribution. So thank you very much, Roger, wherever you are, if you want to stand. Thank you, Roger. And before I go any further, as is required by securities regulations, I need to draw your attention to the important note concerning our use of forward-looking statements and information in this presentation. Forward-looking statements involve risks and uncertainties and are based on numerous assumptions. Many factors may cause actual results to vary. Certain of these risks and other factors are described in our public filings with Canadian securities regulators and with the SEC, and we do not assume the obligation to revise or update any forward-looking statements except as required by law. Now, I'd like to begin with a few comments about safety. We are very proud of the culture of safety that we are building at Teck. We've come a long way, and I've said many times, nothing is more important than the safety of our people. And 2012 was an important year of progress in that regard. We rolled out the next phase of Courageous Safety Leadership, CSL3 as we call it, and that's designed to further develop and to embed our culture of safety. And we are seeing results. I'm pleased to report that in 2012, we recorded the lowest total reportable injury frequency in our history, representing 9% improvement over the previous year, and with the fewest number of serious incidents on record. But this achievement doesn't mean that our work is done, but it does remind us that by keeping focused on health and safety, we can reach our goal of ensuring that everyone goes home safe and healthy every day. Turning to some financial highlights. 2012 was a year of global economic uncertainty, and it resulted in lower commodity prices. So as a result, our revenues were $10.3 billion, gross profit of $4 billion, adjusted profit of $1.5 billion, and EBITDA of $2.8 billion, and these were all down compared to the record levels that we achieved in 2011. And it was due mainly to these lower commodity prices. But in spite of the weaker commodity prices and markets, our balance sheet remains not just strong, but very strong. We closed the year with a cash balance of $3.3 billion, and we have only $323 million of debt that comes due between now and the beginning of 2017. So our strong financial position ensures that we remain well positioned to act on new opportunities. Notwithstanding our strong financial position, the global economy remains uncertain, and to counteract price declines, we have focused on cost management strategies. In the fourth quarter of 2012, we put in place a program aimed at reducing our production costs. To date, we've identified sustainable annualized savings of approximately $200 million and a further $75 million of one-time savings and deferrals. The effect of these initiatives is beginning to show in our quarterly results, but the full effect is expected to be realized over the balance of the year. And likewise, we announced the deferral of $1.5 billion in capital spending. By taking action now, we are ensuring that we remain well positioned to weather this period of uncertainty and to capitalize on opportunities as they arise. I am pleased to report that despite challenging market conditions, in each of our business units we did achieve our production guidance, and this demonstrates the resiliency of our broadly diversified asset base and the benefits of our ability to expand production at key operations at relatively low capital cost. At our operations, we saw a number of milestones achieved in 2012. In copper, we achieved record production of 373,000 tons thanks to investments that we had made at Antamina, Carmen de Andacollo, and Highland Valley copper operations. And within that, in the second half of the year, we hit an annualized rate of 400,000 tons, and that compares to 2007 of 250,000 tons. So we have had 60% growth during a time period when some of our competitors actually saw their production fall. In coal, we increased both production and sales by 8%, and we also achieved a total production capacity of 27 million tons, which is expected to grow to 28 million tons by the end of 2013. In zinc, a real highlight after many years, we saw the renewal of Red Dog's main water discharge permit, and that's something we've been waiting for since 1998. We're just delighted to have it in place. And finally, in energy, we closed a transaction giving us 100% ownership of the Frontier Oil Sands project, which has increased our total contingent reserves by 67% to 3.5 billion barrels of bitumen. Moving to our demand outlook, it's easy to be discouraged when one scans the recent headlines. However, as a mining company whose projects have lives often measured in decades, we have to look at the longer-term trends. In China, the new leadership has confirmed that they are focused on steady economic growth. And while much attention has recently been paid to the so-called slowdown in Chinese growth, it's important to remember that the 7.7% growth that was reported in the first quarter is actually much larger on an absolute basis than the growth that they had 5 or 6 years ago. In fact, 7.7% is actually almost double the absolute growth rate, and in fact, it's likely to get larger. And that is why at Teck, we don't care about percentages, we care about tons. And the tons of demand are still going up. Likewise, urbanization continues to be a central focus of the Chinese government, and it's anticipated that 13 million people will move to cities in China every year for the next 2 decades. So despite all of the uncertainty in the world, one thing remains certain: people need minerals. And whether it's steel-making coal for urban growth or copper for smartphones, mineral products are central to providing people with a better quality of life. And across the world, there are literally billions of people fighting for that better quality of life. The OECD estimates that the middle class could grow by up to 3 billion people over the next 20 years. And as that middle class growth occurs, it means everything from new hospitals to new schools to new transit systems will be built, and all of which will require large volumes of mineral products that we produce. And that's not to say that there won't be ups and downs. There will be, but I believe the macro trend of solid demand for the products we produce remains intact. As I mentioned earlier, our strategy to capitalize on this trend remains the same: to continue to build an inventory of long-life assets in stable jurisdictions. In coal, we completed the feasibility study for reopening Quintette in the third quarter, and we're working towards a potential startup next year in 2014. Quintette would also produce an estimated 3.5 million tons per year over a 12-year mine life, and we think it will be extended much beyond that. In copper, we recently secured an energy supply for our QB Phase 2 project and are now working towards refiling the SEIA towards the end of 2013. And we also plan to complete the feasibility study for the Valencio project also by the end of 2013. And in energy, we're approaching a project sanctioning decision on Fort Hills with our partners Suncor and Total. As a result of our Stay the Course strategy, we are increasing production behind every single share that's outstanding for Teck. Compared to 2009, which was our first full year of production following the forwarding transaction, we plan to have increased coal production by 66% by 2018. In copper production, our plan is to more than double that in the same time frame. And in energy, we're building an entirely new business unit with estimated production of 11.7 million barrels per year as well by 2018. So over that same period, we'd also like to continue to increase the dividend if possible, financial circumstances permitting, and also, if possible, to buy back a few shares along the way. And this will provide more value and greater returns for every single share outstanding. Key to growing our business is ensuring that we maintain and develop support for our activities in the communities in which we operate. In 2011, we launched a comprehensive sustainability strategy that set both short and long-term goals to guide our efforts in this regard. And our focus in 2012 was on putting in place a strategy to achieve those goals across the company. And as a result of the work we've undertaken, I am pleased to report that Teck was named to the Dow Jones Sustainability World Index for the third consecutive year. Our Dow Jones Sustainability Index score placed our sustainability performance in the top 2% of mining companies worldwide. And then in January of this year, a very proud moment at the World Economic Forum in Davos, Teck was named the top-ranked Canadian company and the top mining company worldwide on the Global 100 Most Sustainable Corporations list. We certainly have more work to do, but I think that these recent acknowledgements confirm that we are moving in the right direction. On the ground, our efforts in sustainability are making a real difference, and a good example is our Zinc Health program. Sadly, over 450,000 kids die each year because of zinc deficiency. And as one of the world's largest producers of zinc, several years ago we realized we were uniquely positioned to help address this problem. Through our partnership with the Government of Canada, the Micronutrient Initiative, and UNICEF, we have now launched zinc treatment programs in 4 countries. And these are programs that are literally saving children's lives. In fact, over 10,000 kids, including those pictured here on the screen, have now received life-saving zinc treatment in Senegal. And if you look closely, you'll see they're actually wearing Teck t-shirts. These children actually received real treatments from us. And these are just the first of 750,000 children that we plan to treat in that country. And in Ethiopia, Burkina Faso, and India, we plan to treat a further 3 million children. And UNICEF estimates that in India alone, our efforts will save the lives of 150,000 children by the year 2017. And this program is a great example of how when we combine our expertise with the right partners, we can make real and meaningful positive change in the world, and that is something that we can all be proud of. So in summary, in spite of weaker commodity prices in markets that are unlikely to change in the very near term, our financial position remains very strong. We've implemented a prudent cost management program to ensure we remain well positioned to weather this uncertainty and to capitalize on opportunities when they arise. The long-term demand, though, the outlook remains solid, the macro trend is firmly in place. And as a result, we are focused on increasing production behind every share to capitalize on this trend. I would also like to take this opportunity to thank all of our employees for allowing us to meet our production targets and controlling our costs while achieving our safest year on record. I'd now like to introduce Ian Kilgour, our Senior Vice President of Coal, and Ian will be providing a more detailed overview of our coal business. So Ian, come on up.